Welcome to Candid Conversations for Financial Markets podcast series. I'm your host, Laura Paglia, President and CEO. Our podcasts are designed to provide insights, transparency, and provocative yet achievable proposals for matters that move financial markets in Canada. Today, we're discussing one of the most talked about developments in capital markets, tokenization. We'll explore adoption across institutions, emerging use cases, key barriers, and how tokenization is set to reshape financial intermediation over time. We are delighted to be joined by Germán Soto Sanchez, Chief Product and Strategy Officer at Broadridge Financial Solutions, where he leads the firm's product operations, enterprise platforms, AI, and innovation. Prior to joining Broadridge in 2021, Germán served as President and Board Director of Cloud9 Technologies and previously as Executive Director at JPMorgan Chase Strategic Investments. He has also held key roles at Certus Holdings, AIC Private Equity, McKinsey, and Bain & Company. Welcome, Germán.
Oh, great to be here. Thank you so much, Laura.
So to start us off, this word, the tokenization, that we are hearing absolutely everywhere. What is tokenization?
It's a really apt question, especially given to everything that's happening with tokenization today. But look, simply put, so tokenization is the process of transferring the ownership rights to a traditional asset, so a traditional real world asset, right? So that could be stocks and bonds that we normally think about. It could be something like gold or real estate or art. And you're basically transferring that ownership onto a digital token on a blockchain, right? So the summary words would be sort of you're digitizing ownership onto a token on the blockchain, essentially is what you're doing. And that's what tokenization is.
So thank you. And does that mean that any asset class, anything, can be tokenized?
Uh, I wish, but the answer is no, not everything. They are, fundamentally a number of things can indeed be tokenized. However, not all assets can, right? You may have assets that represent sort of non-transferable rights. These are things, and there's a big difference between sort of digitizing something and tokenizing something, right? Digitizing, there is a digital representation, but again, the operative when I was defining tokenization, there has to be an ownership aspect to it as well, right? Just because you digitize something doesn't mean you own it, right? So when you think about assets like a membership or a license or a permit, like those are things that actually have value, but just by the concept of tokenization, they're non-transferable from a legal perspective. And so not everything can be tokenized, but these things are digitized all the time, right? You can see a digital version of a permit or a membership or license, etc., but that's not something that can be tokenized.
Okay. And the tokenization, the impact of tokenization, it can mean different things to different parties. So we'll start with a custodian. What does a custodian do in financial markets? And why is tokenization matter to them?
Yeah, and what I would say is the definitions of tokenization for the most part stays the same. It stays the same. But you're right, across different players, the approaches to tokenization are different because each of them are focused on a different problem, right? So we start with a custodian. Custodians are focused on safekeeping of assets, right? So the way they approach tokenization is around safekeeping, it's around control, right? It's around settlement, servicing, risk management. Like that's what they're focused on when it comes to tokenization. And that's what they would prioritize when it comes to that. If you look at other players, right? If you look at an asset manager, for example, right? They are much more focused on product, especially product manufacturing and distribution, right? Because they're basically issuing funds, et cetera, and they want to distribute those funds. And so, how do I leverage tokenization to accelerate that and give me more access to investors? And so that's how they think about tokenization, what it can advance for them. And then you have like wealth managers. And for the wealth managers, they're thinking about sort of tokenization from the perspective of uh, the client experience around sort of portfolio construction and suitability and things like administration, right? How do I make sort of the administration easier sort of across my client base as well? And so again, each of them focused on different things. And these are different ways that tokenization can be leveraged as well.
Thank you. The tokenized asset market today, globally, is approximately how big?
It varies depending on who you ask. But what I will
Yeah.
say, uh, summary word is it's relatively small today, is going to be pretty darn big in the future, right? So when I say relatively small today, depending on who you ask, the estimates vary from around 650 billion to about a trillion overall in the market value of tokenized assets. When you look at 2030, for example, between now and then, the numbers range from, let's say, 12 trillion upwards to 20 trillion. Numbers that we've seen sort of are close to like 13.5 trillion. And so when you look at that range, you're looking at really massive growth. Any way you cut it, the growth is massive, right? So 650 billion to a trillion today, 12 to 20 trillion in the future, think of it somewhere in the midpoint, that's a CAGR that's over 80% per year. And so we're seeing pretty massive growth there. And I think what also is really interesting about all of this is that when you think about the universe of assets that can be tokenized, the numbers I just mentioned represent a small single digit percentage of that overall space, in the vicinity of 3%. Right. So for some, that's kind of rounding error, right? Which is like, what if it's 4 or 5? And so that's why you see such a high range in terms of the size of the sort of tokenized market, right? And the value associated with it, because it's growing really quickly, but the overall pool of assets that can be tokenized is so massive that just a 1% shift in that sort of dramatically increases that number. And just with what I just mentioned, gives you a sense of the potential for how large this market could be over time as well.
And in these early days, who are you seeing as leading the adoption?
So we conducted a survey last year, and we released this around the fall. And that is one of the questions that we focused on in terms of across different sort of customer types. So we looked at uh, across North America and Europe, we looked at over 300 financial institutions. And across those institutions, we focused on custodians, on asset managers, on wealth managers. And what we saw is that sort of in terms of leading, who's leading adoption, right? At the top end of that range were the custodians. And
Mm.
specifically, we found that about 63% of custodians were already to engage in tokenized asset services. And furthermore, there's another 30% that are preparing to do so over the course of the next 2 years. So when you think about that, it's over 90% of custodians will have some form of sort of tokenized asset services over the course of the next 2 years, which is pretty meaningful across sort of that sample set. And we also spoke to them around what's driving that, like why are you interested in this? And I think from a motivation point of view, there was some consistent sort of messages that came from them, right? They talked about security, right? Enhanced security, which again is one of the things when we talked about from a tokenization perspective, like what are they looking for, right? So security, uh, operational efficiency, which ties back to sort of the concept of settlement, which again we mentioned one of the things that they're looking for, and improve transparency as well, right? So that's what's driving the custodians. The second category, so trailing them, was the asset managers, and the asset managers, are somewhat gaining ground. We saw that roughly 15% of them are offering sort of tokenized funds today, which is a far cry from where the custodians are. But what we
Mhm.
saw was that about 41% of them plan to do so, or an incremental 41%, right? Plan to do so soon over the course of the next 3 years or so. So now you're seeing sort of a significant increase in the asset managers, on a go forward basis. And I think for them, the goal there and what they're looking for is satisfy investor demand, which is what they're starting to see, but also helps to accelerate innovation for them, uh, and access to things like sort of private assets and other asset classes. And when we talked about asset managers, again, one of the things that we talked about they're looking for, right? Issuance when it comes to funds, they're looking for distribution. They're looking for additional things that their clients want. So that message also resonates, with what they're looking for. And then the third category are the wealth managers, which are the most conservative of the bunch. And so only 10% of the surveyed wealth managers are actively involved in tokenized services today. Although about a third, anticipate sort of entering and offering something like that in the tokenized market over the course of the next 2 years or so. So we see them picking up on the end, but it's also very clear that this is not sort of overwhelming adoption on the wealth manager side. There's still a conservative slant to that as you approach, a little over 30% of them. So becoming much more engaged over the course of the next 2 years.
And um, the asset managers, you mentioned distribution, because tokenization is to make distribution easier.
Yes. Yeah. Tokenization has a number of benefits that, as we think about why is tokenization picking up a lot of steam, right? There's the aspect of what's happening in crypto, right? You have uh, access to crypto through ETFs and things like that
Mhm.
have come out. And so now you can sort of access them more easier. You're seeing sort of, growth in number of wallets that people are having, a lot of investor engagement. Um, but when it comes to asset managers and distribution, one of the things that gets them excited is a core benefit of tokenization, which is, it enhances liquidity. It also enhances or democratizes access to assets, right? And
Mhm.
what that means is that sort of hard to obtain assets can be fractionalized. It can be easier to access. So that not only applies to private assets, alts like private equity, private credit, but even things like art become democratized and easier to access as well, right? So you're seeing sort of this move, especially by asset managers who are very quick to start thinking about sort of like how to tokenize and leverage distribution brought about through tokenized assets.
And in all of those opportunities, what asset classes do you see emerging as leading use cases for tokenization?
I think it's the rule of thumb I'd like to follow is a rule of thumb focused on sort of simple to complex. Right. So simple meaning that today you're seeing a lot of activity when it comes to things like cash or cash equivalents, cash like products. When you're looking at things like funds, specifically money market funds, and you're looking at govies, right? Government debt, government instruments. That's like the simple, and you're seeing a lot of activity like that today, and it makes a lot of sense. And actually, the volumes right going into that are pretty, building up pretty quickly. I think going forward, you're looking now at things like equities. You're also seeing things like real estate, private equity, private credit, art, collectibles, we mentioned beforehand, things like commodities as well. And I think the a key point here is it does differ between retail and institutional to a certain extent. And I would say not on the aggregate, but rather maybe the order differs between retail and institutional, right? So retail puts a bit more emphasis on equities and things like real estate, followed by private equity, private credit. Institutional, there's equities, but they put more emphasis on things like private equity, private credit, followed by real estate. So we're seeing a little bit of a difference in the order between retail and institutional. But the key point here, across all of this, is that, we did a survey and we did a white paper a couple of years ago where we looked at this question and we asked ourselves, hey, what are the asset classes? But also, what's the timeline associated with those asset classes?
Yes.
And we not that we prognosticate a lot, but we said, hey, what do we think is the timeline for the tokenized market, its evolution? What I will say is that things were moving a lot faster than we could have predicted. If you asked us 2 years ago that we would be speaking about sort of tokenizing equities today, we would have said, hey, it's still a couple of years out. But what we're seeing on a global basis, and actually because of a number of institutions in the market, we are seeing sort of an acceleration of some of this, right? So normally I would have said, hey, and for some of the latter asset classes, maybe that's like within the next 4 or 5 years. It's possible that it could be as soon as 2 to 3 years. I'm not prognosticating here. I'm just saying that
Mhm.
this is moving very quickly. Obviously, there are a number of factors that are shaping that, including the regulatory environment and the ability for institutions to focus on laying sort of the groundwork, the infrastructure necessary to make all of this happen.
Okay. And on that, what could speed this up or slow this down? What do you see as the most significant barriers that stops this from happening tomorrow?
Yes, and there's a set of barriers, and again, I would say the the barriers keep falling. And so, one point I'll make is tokenization by itself um, doesn't get us there. And what I mean by that is tokenization. Think of it as helps to address infrastructure, right? But tokenization does not equal liquidity. Meaning, if I tokenize a share of something, if there's nobody else for me to like interact with, it there's no use for it, right? But now, if I tokenize something and it's I have it, and Laura, you want to buy it, and so now we can sort of do a transaction. Well, that's great. Now we start to sort of have the fundamental, groundwork for liquidity, and so I think liquidity is a key factor here in terms of making this work. And what do I mean by that? Well, to facilitate liquidity, you're going to need a couple of things. I gave an example. You got to have enough buyers and sellers, right, who
Mhm.
are interested in purchasing or selling these tokenized assets that we just have. Otherwise, you're just sitting there. You need sort of market makers, right, who are involved in making markets sort of in these tokenized assets. You need clear legal rights, right, in terms of investor protections and sort of what can I do with these things. And you need price discovery. Sort of how am I going to know how much it's worth? Where do I find that information? What are the venues that I can go to? You also need things like um, what are the rules around custody? Who owns what? What happens if I'm using a provider and they go bankrupt, etc.? How do I think about taxes? How do I think about disclosures and what are the standards around disclosures? How does distribution work? How do I address fragmentation around different networks? There's about 1,000 different layer one networks, of which maybe about 60 are the most prevalent. So how do I deal with the interoperability or lack thereof across all those different networks? So there's a lot of things that need to happen, but all of these things, some can be addressed through infrastructure, but a lot can't, right? And this is sort of around sort of like how do we address liquidity? Now, I will say I do think that these things will be addressed because everything else has moved so quickly, much quicker than I think sort of I thought and than we thought. And so I do believe all of this will be addressed, so not just the tokenization piece, but the liquidity piece, which then is going to sort of create sort of this really strong sort of viable market on a go forward basis that's going to deliver on that premise of, you know, 13, 14, 15 to 20 trillion in assets by 2030.
Mhm. And you've um, you've mentioned various forms of regulatory considerations or legal considerations, tax, legal entitlements. Is it fair to say that right now, when we look at this globally, you have um, we're not at the stage of any kind of global regulatory convergence, right? You have uh, the United States, for example, the chair of the SEC is rethinking NMS in light of the tokenized world. That's an example of what the United States is doing. Uh, we're not at the stage. The Europeans, there's aspects of MICA that address this, but we're not globally at the stage where everyone is approaching it the same way.
That's right. And I think if you look at what's happening with MICA in Europe, it is going from I call it sort of like the test phase into like the enforcement phase. And one benefit of it, though, is that it does give folks a consistent set of rules across the EU, right? So if you're licensed, MiCA licensed in one place, that applies across the entire sort of EU, which I think it's great, right? So it provides, clear market rules. It provides good investor protections. It's good for crypto business and the EU, etc. But that's in the EU, right? I do believe, as you mentioned, I do believe there will continue to be fragmentation um, across the global regulatory landscape. Now, one of the things about tokenization, especially sort of the tokenized, assets that we talk about, is that there is a real world analog. And what I mean by that is there might be a little bit of convergence because you actually have an analog to look forward to in the real world, right? So you have a tokenized equity, we have the real world equity to look at. And there's a little bit of frameworks that are familiar associated with an equity. So thus the statement of a tokenized sort of equity is an equity and thus should be afforded with the investor protections and requirements associated with traditional equity. So there are a couple of places where familiar frameworks exist that I think can help. And I differentiate that from crypto because crypto is just totally new, right? And so there wasn't sort of a framework to lean to understand sort of how to think about that. But on the tokenized side, if you're tokenizing equity or any other asset, there's a real world equivalent. You can at least sort of leverage some of that as well.
Um, and we hear a lot about firms' legacy systems, old technology, old systems, um, the plugins, the workarounds. Um, Could you walk us through some of the challenges that you're seeing with legacy? Um, and are there any takeaway trends that are emerging?
Well, look, I think one of the trends that's emerging is that you have to connect TradFi to DeFi in order for it all to work effectively. And if anything, they're complementary to each other. And so I think that's something that people are starting to learn, right? You had a lot of DeFi firms, and you've had recent announcements where you've had TradFi and DeFi unite. You've had sort of Nasdaq and Kraken, basically sort of combined together, and that's going to facilitate liquidity, right? And so there's a realization that's what that makes sense. The combination of TradFi and DeFi. You had sort of ICE New York Stock Exchange, the OKX. And I think those are examples of sort of the need for TradFi and DeFi to come together. I believe they're complementary, and as we think about sort of like the path forward, there is a definite role for TradFi firms, in this space on a go forward basis. And so when we think about the different models, the different participants, the role of intermediaries, for example, or service providers that exist today, I believe that they're going to continue to exist, and the reason is, investors still need someone that they can trust, right? Investors still need advice, right? They need someone that they know is going to be compliant, somebody that, will provide reporting, and so someone that's truly trusted. And so, from my perspective, there's going to be sort of a continued role, and it could evolve, but there's going to be a continued role for sort of existing sort of TradFi firms, intermediaries, etc. But again, there will be some evolution because there are aspects of the process flow that are going to be simplified, through tokenization. That's just part of sort of the definition, but there's still going to be, I think, a substantive role for a lot of these sort of traditional firms.
Um, so, in light of what you've described, um, we hear that tokenization is going to shift traditional, what we call intermediary heavy distribution models, toward more of a direct to investor distribution model over time. Could you just start by walking us through currently? So we're going to take out the middle people or the middle infrastructure. Is often the discussion that's being that circles. Could you start by just explaining to us the most visible market intermediaries today, uh, and how they may be impacted by tokenization?
Yeah, so let's first go through the call it the flow or the value chain
Yes.
of the
Yeah.
tokenization, right? So when you look at it on the tokenization view, you have issuance. Basically, it's like sort of the tokenization of the asset. You have issuance. Once it's issued, you basically are going to have uh, the concept of trading, clearing, settlement. You have custody. Once it's custody, you now have asset servicing, which includes sort of corporate actions and things like that. And then you have reporting. So, like, that's the end to end in terms of how we think about the value chain. So,
Yeah.
traditional world, right? The issuance process, runs through sort of, hey, we're going to issue a traditional asset, and then you go through your underwriting process, and you go through your process of going public or issuing additional shares, etc. In the future world, basically, there's different options for issuance. And so the issuance process can be done sort of there's the traditional way. And then in the tokenized world, there's a couple of different ways that issuance can take place. Issuance can take place by the issuer itself. So the issuer can go through, for example, a digital transfer agent and actually sort of issue the shares. You can also have the issuer work directly with an exchange like a New York Stock Exchange or a NASDAQ as well for issuance. And so that's one of the models, the issuer sort of led model. You can then have a third party model where basically you have a third party that essentially is doing the issuance. In this case, they're doing the tokenization, which is they're taking the real world asset and they're tokenizing it. And so in that case, that's the model where you see institutions like the DTCC that basically is going to tokenize, assets, or you can have a third party firm like an Ondo Finance, who, for example, creates, call it synthetic versions of equities, for example, that then sort of they distribute. And so there's different paths now that are happening sort of at that issuance level. Then you go into things like the trading aspects of it, right? And so from a trading, perspective, there will be you have sort of the traditional sort of market the way trade works today in terms of pre-trade, trade, post-trade, and sort of the trading life cycle. With tokenization, you will have a number of things that will be very different. You will have sort of market efficiencies brought about by things like atomic settlement. You have sort of digital exchanges that you work with, etc. You have fractionalization, and so there's a couple of different things that sort of can potentially help, especially on the clearing and settlement side, to compress that part of the life cycle overall. And so tokenization will have an impact there, but notwithstanding that, there's still a role for trading firms. There's still a role for custodians, right? In that part of the cycle. Then you go into uh, sort of asset servicing, corporate actions, right? Which is essentially around uh, things like proxy, things like disclosures, and things, other shareholder rights, etc., and other corporate actions. So again, that's going to continue, right? As if you're talking about the equity side, that's going to continue as well as reporting, right? So you're going to have a number of things that are going to continue. And the thing I like to say is, from a tokenization perspective, um, what you're really looking at is sort of a number of parts of the process that are highly manual, have an opportunity to be remade, in a much more automated way, right? And accelerated. So you will see compression of that chain that just went through in a number of parts. But from a sort of service provider point of view, you're still going to need sort of a number of service providers along that value chain. I think that's the key thing, which is also why I say that there's a complementary aspect of TradFi and DeFi, because the ability to connect different players across that value chain will be critical to show how this can flow sort of end to end very seamlessly, very efficiently as well. I know that
So,
was a lot, so hopefully that
oh
that
no,
helped
no,
out.
it's fascinating and fast. So if you're a custodian, an asset manager, or a wealth distributor today, what should you be doing to jump on this train?
Yeah, so if you are an asset manager, right, if you go through that chain, one of the things that that chain does, it compresses certain parts of it, right? So from an asset manager point of view, it creates opportunities for you in areas like distribution. Right? You can sort of manufacture funds um, that can be sort of distributed in ways that are very different than you've been able to do so in the past, and also brings you some operational efficiency as well, right? So those are two angles for it. If you're on the wealth side, uh, what we're seeing is firms with clients who are really interested, right, in engaging with the sort of digital asset ecosystem. And so as a wealth firm, essentially there are opportunities for you to offer some of these tokenized assets, right, crypto, et cetera, to your customer base. Now, what does that mean? I think across all of these firms, like the number one thing I like to say to all of them is you got to get engaged, right? Because the key thing here is that you should not sit on the sidelines. You should engage in different ways to do that, right? You should make sure that you build your internal understanding of what exactly does this mean for you, right? Make sure you have the right people or you bring the right people on board to do that. Understand how this impacts your flow, right? I just went through a chain at a high level. What's the chain? If you're a asset manager, what does that chain look like for you? And how is that chain impacted? If you're in wealth, what does that chain look like for you? And how is it impacted? So understand how that sort of impacts your business, your workflow, your chain. And then you have to prepare yourself for that impact, right? So how do you think about legal, or how do you think about your risk management functions or your operations or your compliance functions? And how do you get those ready, for those changes that potentially can come to the chain? I also think, very importantly, you should be running pilots. You should be experimenting. You should be thinking through, well, what does this look like? What are some of the pilots that I can run? I know we were talking sort of offhand beforehand around things like the sandbox, right? And kind of, and so we think it's really important to think about like what are some of the safe places for us to experiment and try out different things as we get ourselves ready for the changes that may be coming. And so that's the key thing, for me, and sort of like that I like to highlight for folks is you have to start getting ready, you have to experiment, you have to start building sort of the muscle memory to engage with this ecosystem. We've talked to a number of clients. We talk about the wealth space, for example, and a number of our clients are telling us that there are assets that are migrating outside of their platforms to the platforms of digital native exchanges. Why? Because they want access to cryptocurrencies, et cetera. And very soon it's going to be access to tokenized assets as well. Maybe you have tokenized alts, private credit, private equity, et cetera. And so what these firms are saying is, hey, we want to stem the tide of sort of those outflows that we're seeing. And so we want to be able to offer these solutions as well to our clients. Now, it's not sort of easy for them from a perspective, as I mentioned earlier beforehand. If you look at wealth firms, for example, they're the most conservative, right? And so there's a balance between sort of developing a solution that does that and feeling very comfortable that you have the right sort of guardrails, right, to make sure that you protect your users, you protect your customers, and have the right set of checks and balances in place as well. Which again, part of it comes from regulatory guidance also. And so I think across some of the different sort of customer groups that we've talked about, there is movement across all of them, some faster than others, some waiting a little bit more regulatory clarity to exist so that they can feel comfortable jumping in all the way. I do believe that this is moving very quickly. And to that extent, we're starting to see some regulatory guidance and more of that will come out. It will be fragmented on a global basis, but I think there will be some commonalities that we will see. And this is a market that's going to represent sort of a sort of, I think, a material change over time to the way that sort of financial services infrastructure, will operate in a very good way and in a complementary way, which I think is the final point of our reemphasize that there is a place here for traditional finance companies that could be very complementary to, DeFi institutions as well.
Well, thank you very much, Herman, for joining us. This was very informative and very exciting to hear about. Thank you.
No, thank you for having me. It's a very sort of fast growing, interesting, highly impactful area that I think is going to be very exciting for a very long time. Thank you for having me.